Yo guys, hello, welcome back to the channel, welcome back to the Dividend Investor. I'm back today with another video in my dividend stock analysis series. Today I'll be going over the PepsiCo stock, ticker symbol PEP stock, giving my dividend stock analysis of them. I'm just going over the dividend yield score out of 6 on the Simply Wall Street app. And obviously doing a bit of basic information about the company as well, having a little look at the balance sheets, at the debts and assets and liabilities, and whether I think this is a good investment or not. Obviously this is my own personal opinion, I'm not advising anyone, so obviously just taking that into consideration. I'm not a financial advisor, this is just for entertainment purposes and obviously just to see whether you think it's a good investment as well as I do. So yeah guys, food and beverage company PepsiCo, obviously with a market cap of 182.5 billion. Let's just have a little bit of look into the information tab of PepsiCo now, trading on the Nasdaq. So the key information, PepsiCo, ticker symbol PEP, on the Nasdaq exchange, founded back in 1898 in the soft drinks industry sector, food, beverage and tobacco, with obviously a market cap of $182.52 billion. Outstanding shares, 1.39 billion. And a bit of information about the employees, have a total of 267,000 employees as of 2009 December. The location is in New York, United States. Obviously, there's listings of all the other different stock exchanges that PepsiCo are on. So now let's just have a little bit of look into the health of the company. They get 3 out of 6 score on the financial check, which is average really. PepsiCo's short-term assets of 24.3 billion exceed its short-term liabilities, which is obviously always good. Score number 2, the short-term assets don't cover the long-term liabilities. Obviously the liabilities are bad, which is debt, etc. Score number 3, the debt to equity ratio has increased from 188.89% to 292.7% over the past 5 years. So they're the 3 bad blotches, which are all quite, basically the short-term assets don't cover anything long-term, but we'll cover that on the next score. So score 5 out of 6, is Pepsi interest payments on its debt are well covered by the EBIT, 10.4 times coverage. Obviously the interest payments on its debt are well covered. There we go. PepsiCo's debt is covered by its operating cash flow, which is by 23.3%. So its operating cash flow is money that they're making and distributing out, which is really good. So you can see anything short term, the assets just outweigh the liabilities. But in the long term, the assets do outweigh them by around $10 billion. So let's look at the balance sheets now. They've obviously got 42.8 billion in long term and other assets. Cash and short term investments, 11.2 billion. Physical assets, 19 billion. Receivables 8.5 billion and inventory 3.6 billion. So obviously it's a lot of good assets there. So obviously debt, they've got 39.7 billion, which obviously the bigger companies will have quite a bit of debt, but obviously if they're getting enough, obviously if their assets can cover the debt, they'll be okay. Obviously they've got other liabilities, 15.6 billion, equity of 13.6 billion again, 15.6 billion for other liabilities. And accounts payable 16.2 billion. So obviously all they do have the debt. I'm confident obviously PepsiCo can be a solid company. Obviously they've been solid for the past however many years now, hundreds of years. So I'm obviously confident that they will continue that into the future. So now we'll get into the main part of the video now, which is on the next tab, as you can see on the right, the dividend score. So I'll be giving the Simply Wall Street will be giving the dividend score rating out of 6. I'll just be going into each point as I've done obviously in other videos that I've done. So let's click onto the dividend tab. Pepsi's current dividend yield is 3.11% and gets a score of 5 out of 6 on the Simply Wall Street app. So we'll check on score number 1. Its dividend, obviously I don't think this has been quite updated, as I think the dividend is now changed to 3.11%. It's higher than the bottom 25% of dividend pays in the US market, which average just under 2%. The blotch on the scorecard it's on the low side compared to a lot of the top US market dividend payers, which average 5%. Obviously, I've said in many videos doing this, the higher the yield, not always the better. So this is quite a solid yield in my opinion, with the price to share ratio The dividends per share have been stable in the past 10 years, so no cuts, no decreases, just continuously paying the dividends, which is good, what you always want. Score number 4, Pep's dividend payments have increased over the past 10 years, which you always want which is always good as well. You want a company to continue growing the dividends, so it's good that Pep's have been increasing them over time. Score number 5 is Pep's dividends are forecast to be covered well by their earnings by a 64.2% payout ratio, which is really good as well. And the score 6 out of 6 is with its reasonable payout ratio at 73.6%. Pep's dividends are well covered by their earnings. So obviously, as you can see, guys, I think PepsiCo is really good, solid dividend yielding stock. They've continued to grow the dividends. They're paying the dividends regularly. They've never cut them. Obviously, they've been paying them for a long time. So I feel like your money is pretty safe with PepsiCo if you're looking for a good, solid dividend company. As you can see there, guys, the dividend yield versus the market, they're pretty average. Not on the top 25%, but not in the bottom 25% either. So therefore, it makes it a good, solid yield, in my opinion. So that is pretty much it, the analysis of the dividend stock analysis of PepsiCo, guys. Let me know what you think of the company itself, if this video has helped you or not. Obviously, just get in the comments and don't forget to like the video as well. Boost that YouTube algorithm out, get my channel out to more people. So that is pretty much it for today's video, guys. I'm going to leave you on that. Take care.